Okay, so we're going to be going over this week's trades. It was a pretty crazy week, if I'm going to say so myself. Um, Took four trades. One of them resulted in a small loss. The other three were winners, so very nice. 75% win rate, looking pretty good. Overall, this week definitely had some ups and downs when it came to my mental fortitude, but we stuck it out. We got through it, and something I just recently learned is that the market always provides you opportunities, whether you are taking trades or you're not taking trades. I'm sure I've mentioned it a couple times last week, but the market is always presenting opportunities, right? There are going to be times where it's going to tell you, look, I'm going to give you no opportunities today. How are you going to react? I'm going to give you no trade opportunities. How are you going to react? Are you going to force any trades or are you going to maintain your discipline? It's essentially an opportunity for me to really exercise my patience muscle, right? Or it's going to provide me the best setups. Is it going to, so then it's essentially the market asking me, look, Brian, we have this A+ setup here. Are you going to take it or not? Are you going to be a pussy? And I think this week there were definitely a couple trades that I did miss out on, but other than that, we did capitalize on some and ended the week green. So yeah, let's go ahead and get started. So first trade, oh man, this one was a very annoying trade because we had the A+ setup, but I did not wait for my ideal entry. I felt this greed and FOMO when I saw this move kind of happen, quote unquote, happen without me. But if I had exercised my patience and discipline, then I would have been able to get my ideal entry and then have this run and target. So if you guys are new here, I go, I base my trades off of three things. It's figuring out the direction, area of interest, and then having my entry model. And well, the mistake I made was not getting in at the ideal entry point of my entry model. So let's go ahead and review it. So this was taken on gold, was looking for a long position, and this was taken with a type 3 shift in structure, which is, you can just say 1 minute change of character, but I've been learning. My mentor is Tom, so I've been taking a lot of my notes and really fully adopted his strategy and made it my own, with of course minor tweaks. Took this one on the Top Step funded account and my live account as well. We had 4 time frame alignments, and the learning lesson here was just the execution. The trade management was just shit, like so shit. And we'll get into it right now. So if we take a look in the 1 minute, obviously looking very range bound, right? Just from pre-market open to market open, we're trading at these lows and these highs. And as we pull back into this area of interest, we get a nice shift in structure where price is currently trending lower. And with volume, we break above these highs, looking for an entry on that pullback for a continuation to the upside. As you guys can see, where would the ideal entry be, right? Realistically, the ideal entry would be right around this area of interest where I had marked out this kind of gray, where I marked out this gray box because it aligned with the 5 and 15 minute levels as well. But if we zoom in a little bit, or if you are able to see, I got in my entry right here. So the reason why I got in right here was because when price had that initial pullback, I hesitated. I did not trust myself to, and I almost felt like I didn't trust my strategy a little bit, right? Wanted to wait for a little more confirmation, something like that. But the moment that candle closed, I got in because I had this fear that the markets were going to move without me. I was trading, this trade did end up going into profit, but however, we did get a pullback and I ended up getting stopped out. I originally had my stops at these lows, but I realized how much I was risking. This was about 5 points on gold, which is quite a lot. And the moment that I saw price move with this big volume candle, I decided to move my stops right at this dotted red line, which is the low of the wick. And although it was very good of me to really work on my risk management, in this situation, it did not work out, right? And the reason being is because, well, I personally think that my error was that I didn't really let price close above these highs. Yes, we did have a nice strong body candle close, but this was the previous high, and I did get scared. I'm going to be completely honest. I was scared. And so I get stopped out for a small loss for this one. The confluences that I had to get into this trade were we had a 5 minute type 2 and a 30-minute type 1. This setup was a lower time frame reversal setup, as you guys can see, pulling back in this area of interest for a higher time frame continuation. Also had it as a range rejection as well, since we were trading in a middle time frame range. But if we take a look at this 5 minute right here, this previous 5 minute candle did close type 2 bullish, which is closing beyond a level, beyond a high, looking to get in on the pullback, which is going to be the creation of the wick for a continuation move to the upside. Like I said again, this was such a textbook setup, but couldn't capitalize on it correctly. We also had a previous 15-minute candle close with a type 1 bullish. That pullback was extremely nice, looking to target the previous highs. 30-minute, we also had a previous 30-minute candle type. We also had a type 1 on the 30-minute as well. As you guys can see, it hit target nicely. And then lastly, on the hourly, we were trading we did have a type 1 bullish, and this previous candle right here was the continuation candle. We were just looking for a pullback to continue the upside, in which we did. And then 4 hour did previous close bearish, but we had more confluences in our favor to move bullish in that time frame within that time before flipping bearish, right? We were trading within the first hour, the 4 hours, so we can anticipate an upper wick to be put in. As you guys know, whatever the previous candle closes, you expect price to move in the opposite direction before flipping. So usually it's within the first half of the time frame of that candle is when it moves in the opposite direction, and then the second half is when it flips. So for the 4 hour, right, 7 o'clock closes, and I'm talking Pacific Standard Time. 4 hour closes bearish. We're expecting from 7 to 9 to move bullish to create that upper wick, and then from 9 to 11, you expect that flip to the downside, which is exactly what we got. And so when you're able to time candle behavior and understand candle behavior, it's a lot easier to align the confluences and know your when you should take a trade. And at the time I was taking the trade, it was at 7 o'clock, right? So that means I was looking for the first half of that 4 hour to move bullish, which is a bullish confluence. Also, we have market structure pulling back into this higher time frame area of interest marked out by our 4 hour level. So we're expecting to see price to move up first. We don't know if it's going to break below, but we know that that's also another confluence that we should be looking for buys. Just terrible trade management. It is what it is. And we move on. And so now taking that idea of candle behavior, right? It's going to apply to this second trade. And the second trade was executed pretty nicely. So if we take a look, ended up actually shorting the range, right? But you might ask, oh, how'd you know when to short it? Well, I'll go ahead and explain it, right? So this was actually not based off of my type 3 entry model. This was based off of candle timing, candle behavior. So usually I trade between 7 and 8. So that means knowing how knowing the candle behavior of the 1 hour is going to be extremely important, right? So we expect the first half of the 1 hour to first move bullish. Wait, let me see. This was, yes. So ignore this previous bar. Let's take a look at this this previous candle. The previous 1 hour candle first closed bearish, right? So we know the first 30 minutes of that first hour candle is going to move bullish. However, once you hit that 7:30 mark, it's usually a good indication of, or you can say it's you can have very good anticipation of that second half of the candle to flip. Also, 30-minute reversals work best when you're trading within an intraday range. And so once that 7:30 time hit, I saw price put in that upper wick. We also had a previous 15-minute candle close, a 5-minute candle close bearish. So we're stacking confluences right now to give us more confirmation to take this trade short. And despite us trending bullish, right? It's all about timing. It's all about when you're getting into the market. It's all about knowing when price is going to move in one direction or the other. So we have here price at 7:30. We put in that upper wick for the 15 and 5-minute candle, right? Because they just previously closed bearish. That means that you're anticipating price to move up first before flipping, in which I did set a limit order to get in short, had stops above these highs, and we had a nice 1 to 1.5 R, something like that. Taking a look at this 5-minute, bearish, got in on the wick, targeted these lows. And the reason why I targeted this area of interest, because I'm still very much aware that the market structure is still bullish, right? I was playing the pullback of this trending move to the upside. Although it's like a trending slash ranging move, I was still very much aware that this could be an area of interest where buyers do step in and potentially push price up. Remember, you're trying to figure out when the market wants to move, and timing is extremely important, at least for my strategy. Previous 15-minute candle close bearish, right? Price attempts that upper wick, flips lower, and I take profits. 30-minute. 30-minute did close bullish, however. So this one is a time frame that is working against us. 1 hour, previous close bearish. After having that 7:30 hit, we flip and move bearish. However, price ends up moving bullish towards the end of the hour. But right now, at that moment in time, we were just focused on getting the or getting the timing right. And it comes with just understanding candle behavior. See candle behavior as really a really smooth out market structure, right? Candle behavior is like 1080 HD, and then you have market structure, lower time frame market structure being 4K of that 1080 of that candle behavior. So price is always a push and a pull. So once you're able to have time frame alignment to align those together, it really does help to know when you should be getting into a trade. I think that's something that I have definitely lacked when I first started trading, was knowing when I should be getting into a trade. Like I would always be anticipating, oh, price is going to reverse here, price is going to continue here. But that has burned me more times than not knowing when price is going to go, you know. I like having a lot of confidence in being able to stack the probabilities of knowing that when this happens, then there's a high probability chance that this move can continue higher or continue lower. And it's something I have been just working on over the last 8, 9 months. It takes a lot of time, especially when you're learning a strategy. You can't just hop strategy to strategy. You really need to hone in and just know the nitty gritties, the ins and outs of your strategy to be able to execute with confidence. And I feel as if I want to say from middle of January to now, I have been doing exactly that. So right now I'm starting to see the time and energy pay off. All right, moving on to the third trade. This one was taken 3 days later. A nice short opportunity on the NASDAQ. Obviously, if you guys are watching the markets, NASDAQ has been extremely fucking bearish, like really fucking bearish. And I think it has to do with the tariffs. I don't know. I don't care about news. I care about when I'm gonna get in or when I'm gonna get out. I'm gonna be real with you. Right. So obviously following the trend, shorting this thing. a nice little win. We had type 1, type 2, and a type 3. So we had a 1 minute type 3 bear shift with a 15-minute type 1. And there had to be a type 2 somewhere as well for me to mark it out. If not, then I want to get that out. This one should be a 15-minute type 2. Oh, and a 1 hour type. Wait, yeah, 1 hour actually. Nice. Okay. So overall, I was following the trend. I was aware that price had a pretty huge move to the downside and then got bought back up quickly. But what were the higher time frames looking like on that pullback, right? So if we go to, let's do 1 hour. We had a nice close beyond previous levels, so I know that the 1 hour is definitely in my favor. We also have the 30-minute closing beyond a previous level of interest as well. And we never really broke above any of these middle time frame highs. So I do have this confirmation that, when price remains below these areas, we can still look for an entry model for short opportunities, in which I did find and ends up working out. And then this last trade, such a beautiful trade, but I will say I did feel slight emotions just because volume didn't move right in my favor, but I had stops correct, I had target correct, I had everything just line up perfectly. So this was actually trading Nasdaq to the upside, right? So one thing I would like to emphasize on is that you need to have your lower time frame structure aligned with either the middle or the higher time frame. It's best if you can get the middle and higher time frame and lower time frame aligned together, but at least have the lower and one of the other higher time frames from the lower line up together, right? So got that type 3 shift, took it at 7:30, anticipating the 30-minute reversal following the trend. The reason why I say 30-minute reversal is because guess what? Previous hour closed bullish, right? First half of the candle, what do? We moved lower. We attempted to break below this structure, this little middle time frame market structure, but failed to, as you can see on this 1 minute right here. Attempted to break below once, moved up twice, moved back up. Third time, was not seeing any conviction to want to move lower. And we also had a nice type 3 shift after attempting to break lower, which failed, got in on the pullback, and then just allowed my trade to run to target. We had the 5-minute close bullish as well. 15-minute did close bear, so we had that against us. 30-minute closed bearish as well. But at the time of entry, this was the candle we were playing it based off of. We had a nice, no, actually, no, that closed against us as well. But we did have a previous 30-minute type 2 candle close, just following the trend hourly type, or not even an hourly type anything, just looking for bullish continuation. And the 4-hour, nice move back to this range. So maybe I could have held to these highs up here, maybe just adjust the stops as we make pullbacks and break highs. But I was very much satisfied with my take profit just due to NASDAQ being in such a heavy downtrend. As you can see right here, extremely heavy to the downside. We've been dropping like 1 to 2% each day for the last week and a half. People are scared that we're in a recession, but I don't think so, right? We are just in a correction phase, especially after that huge bull market during the previous administration. And, with tariffs going on, it definitely makes sense that people are skeptical as to what the market's going to do, especially when we are kind of messing with our relationship with different countries. But I think it's going to benefit the United States a lot in terms of future growth, just because we're going to be keeping a lot of things in-house, right? The only reason why we implement tariffs is to, at least this is my opinion, to implement tariffs means to keep everything produced in the United States. That's why Japan has a lot of their all their Toyota cars produced in the United States because they don't want to pay the fucking tariffs, right? And that really increases our GDP because one thing about our economy is that we are consumption based focused in our GDP. Let me see. GDP was made up of three things. There's a formula, right? Consumption, investment, government spending, and net exports. Americans are known to be very big on consumption. The Japanese, very big on investment. We also do spend a lot on government spending. So that is something that we are looking to reduce, and we are looking to increase these net exports. But also we want to um because our culture is just so much about consumption, that's something that it's going to be hard to just shift all of the whole population to go from a consumption to investment standpoint, that we need to also increase the other three, right? Or the other two. We want to increase net spending, but we want to keep government spending lower. I think it's something like that. Correct me if I'm wrong. I am trying to learn more, but if you're watching this, I'm sure you know more. But all I know is that we have been paying a shit ton of tariffs to all these other countries. And for me, I don't want to fucking pay tax on things that come into our country for no fucking reason. Like I understand it's cheaper to fucking make things in China and stuff, but if you can keep a lot of things in-house, it gets cheaper over the years, right? If you take a look at Dubai, they have no income, no state tax, no taxes because they keep everything in house. The money that is being spent is not being sent out on anywhere. It's being kept in within Dubai or United Emirates, whatever you want to call it. So I think that's kind of the business model that Trump is trying to take because at the end of the day, we want to abolish tax. And the way to do that is to find another way to bring in a revenue of income. And that comes from charging other countries to do business with us and import their goods over here. And there's a lot of things that we don't need from other countries, like some of the fucking whiskey and shit. Like, who gives a fuck? Like we don't need that shit. We don't need. We can keep steel in house. We have forests. We have trees in house. It's just a bunch of things that we can already do on our own. Like we should be able to thrive um as an independent country already. We don't need to be importing too many of our things, like our guac, our just all our other shit. But yeah. Anyways, that is kind of the trade review for the week. Um, Very successful week overall. We went 3 of 4, 75% win rate. And we also passed another account. So now that one has been activated. Going to be looking to participate in another. I think my goal by the end of August is to at least have 500,000 in funding. I think that's a very attainable goal, especially with the way I've been trading. I can probably look to spend less time on these evals and just really I don't want to say pass them quick, but I have a lot of confidence in my strategy already, so there's no need to be spending more than a couple months on an eval. But yeah, overall, loving the progress that I'm making. It seems like, I mean, there are still days where it's like you take 2 steps back and then 3 steps forward, but it's those two steps back where you have to see it as just like a pullback, right? Think of it like the markets. There's always going to be a pullback before you have a bigger move. So that's how I've been just trying to focus my outlook on trading. And other than that, been very good. If you've been watching my previous videos, I hope you're learning stuff from it. Tell me what I could improve on. There's always things that I'm looking to improve on. Any knowledge that you have to share, please share. I am an open book. I am an open absorption of knowledge, if that makes sense. I love just learning. So, and if you're also a trader, go ahead and shoot me a DM. Let's just connect. And I hope you guys have a great week.